And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. ETFs are often associated with buy and hold strategies, but a younger generation is starting to use ETFs in a more active and tactical manner. Let's talk about it with Webull CEO Anthony Denier. Andrew McCorman is the managing director at Wallace Beff Capital, and Harry Witten is the head of ETF sales trading at Old Mission Capital. Anthony, Webull is an electronic platform, has a lot of the demographic characteristics of Robinhood. I see average age 30 years old, 7 million accounts. Before I get to ETFs, tell us how your investor base traded on Friday, since that's the topic du jour. Were they buying or selling? What were they buying or selling?
Yeah, we saw a bit of both, but I was really surprised to see the strong buying demand, because this retail investor right now is extremely bullish on this market, I think for all the right reasons. So they saw this more as an opportunity to actually buy some discounted names, and not knowing which names to actually get into can be difficult when the market's moving so aggressively. So we saw a lot of buying in broad index ETFs, right? SPY being our most popular, a lot of heavy buying there, and our momentum traders we're also utilizing the inverse ETFs, which was pretty surprising, trying to get that momentum on the downside just with using a long account.
Yeah. Now, Harry, you run a big ETF market-making desk. I often talk to you about trading trends. What did you see on Friday, and what are you seeing today in terms of who's trading what?
Hey, Bob. Thanks for having me on. Yeah, it was a super busy day. Everybody thought we were going to be sitting here doing some online shopping, waiting till 1 o'clock. But we traded more on Friday than any normal day last week, and we saw a lot of selling of high yield, a lot of activity in the international space, emerging market space, which Old Mission specializes in, and just as Anthony said, it was just a lot of buying later in the day going into the close, which was early on Friday at 1 o'clock.
It's remarkable how much has reversed, Andrew, from Friday. And now you, Andrew, run a big institutional trading desk. A lot of it's ETFs. What were you telling clients Friday, and what are you hearing from them today?
Yeah, it's funny, the two different generations, right? We have our tactical, old school, reduced risk ETF shops that, of course, Friday, those triggers start to happen. They start to go off. They start to get close. That's, as Harry said, we had some high yield sellers as well. And they're kind of precautionary, right? Now, they might wait a couple days and jump back in. But with this younger generation, I got to tell you, I'm getting into my 20-something plus years in the business, I've never seen a group more resilient. Of course, they don't know a loser yet, and that's a factor, but they're very resilient, very strong. They're buying on dips, just like stronger hedge funds, where it's very unlike a retail audience. You just don't see that panic. Of course, this has been the trend, right? The 1 or 2 day sell-off, and then it pops back up.
Yeah. Now, Anthony, you've told me ETFs are still a fairly small portion of the assets of your clients. But there seems to be two groups here. Some own plain vanilla ETFs, like the S&P 500 or the NASDAQ 100. They also like Cathie Wood, no surprise there. But there's also a more active a group of traders at Webull that have a penchant for using leverage and inverse ETFs, particularly the ones that leverage returns on the NASDAQ 100. They seem to really like that, and even the VIX as well. Why is that group so interested in leveraging, for example, the NASDAQ 100?
Well, if your viewers aren't aware of Webull and how we kind of differentiate our platform, we do have very similar demographics, like you noted in the beginning, to Robinhood in terms of average age, average account size. However, the one differentiating factor that we may have left out is we have very active traders, right? And our traders are very quick to take positions. They go in and out of positions very, very fast. So when we see our active traders, which is a big portion of our users on the platform, they tend to be not able to get access to some of those traditional leverage tools, right? I mean, I'm talking about margin in a retail account, right? You need to have $2,000 or more just to qualify for Reg T. A lot of our users don't even have $2,000 or more. We're talking about millions of them. Also, they may be too young to have the proper investment experience to get access to the options market. Right? So that's another sort of speculative or highly leveraged security that they don't get access to. So they have flocked to these leverage ETFs. And you mentioned TQQQ. I mean, that by far is our most popular leverage ETF that we see our heavily speculative active traders getting into day in and day out.
And that's, of course, the TQQQ is the ProShares Ultra Pro QQQ. That gives you leverage, of course. and when you own the triple Qs. You know, Andrew, I can't help but notice that. Like Robinhood, these are small accounts, as Anthony said, $4,000 on average. But what's the future here? Is it the assumption they're going to grow, and as long as the market continues, they'll continue to deposit assets? Power.
These are the same people that exhausted the shorts in GameStop and AMC. They gave up. They go, I'll go short something else, right? So they have a lot of power and resiliency, and they're growing. And the ultimate sign is you have billion-dollar, very successful companies and new companies. For example, Direction, you know, multi-billions of dollars AUM. They are changing their marketing to really focus on these people. And again, their products, right? Imagine I'm going to the Pittsburgh Pension Dinner next week. Imagine going there and saying, I want to tell you about this fallen knife ETF from Direction, and I'm also going to tell you about the psychedelic ETF from Defiance, right? They would be like, are you crazy? But we're talking a lot of money going into these products. I also want to note, and I'm very proud of Direction and ProShares for education. If you look on their websites, the fourth button is education. And I hope at Webull you're doing the same thing, just explaining it to everyone, even for this audience, to know the effect of long-term holding these assets. Not saying they're doing that, but if you're long-term holding a triple ETF and it goes the wrong way, you know, that can have some unpleasant results.
Yeah. So, Anthony, what about that education aspect? I mean, remember, we all look like geniuses in an up market. What happens when all of a sudden the market drops and, you know, it doesn't work just buying endless call options, for example? That stops working. What are you doing to prepare and educate your investors or the people who put their assets on your site?
Education is one of the most focused and talked about things with platforms like a Webull that serves a younger and a newer investor, right? So, you know, the traditional way of educating is maybe having like a table of contents with a glossary, and it kind of reads maybe like an encyclopedia on a typical brokerage website. And, you know, we have those types of things, but we found that that doesn't work, right? Just because you build a library does not mean that students are going to show up and start reading all the books in your shelves. What we have been doing, and this word gets used very negatively in the press, is we've been gamifying the education, right? We've been taking those nuggets of facts. What is a leverage ETF, right? What is an inverse ETF? What are the risks associated? And put them into easily digestible kind of bullet points and snippets, short videos or animations, or even have an interactive social media questionnaire, right? Now, if you think, you know, what's more risky, you know, a short duration call on a Thursday afternoon or a, you know, triple weighted ETF. You know, I'm just had like polls like that to get our customers involved to actually look up the differences of the risk between the two. So this is a huge undertaking, not just for Webull. I'm speaking actually for the whole kind of mobile first retail industry, where we've actually been having roundtable discussions together, figuring out the best ways to educate our clients. And, you know, some of our peers, Robinhood's doing a really good job of it on social media, I think, of getting that education out there first. Fidelity's starting to do it as well, and using this idea of gamification to get educational content into and consumed and understood by this new demographic, right? We consume, as a society, we consume information much differently now than we did just 5 years ago. And I think the education factor that a brokerage platform gives out to their customers also has to evolve with that new way of consuming that information.